What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. Hope you guys had a wonderful day. There were some excellent trades, really nice setups, and I'm going to be breaking it all down. All right. So why don't you let me know where you're tuning in from tonight? Let me go ahead and throw your name up on the screen and show you some love for being here. Bad Indy, what's going on, brother? Trading Wars Army, VIP, Spy, Holy Grail, beautiful. Adriana, what's going on? Trading Wars Army, Spy, VIP, boom, 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 boom. Who else do we have in the building today? So we had a gap up here, guys, right? What were we looking for yesterday? We had the Nirvana. We know the Nirvana is a rare pattern. We had a beautiful gap up, nice push today. So I'm going to show you how we were able to master that gap up, how we were able to enter that trade. What's going on? Andy Muskoka, good to see you, brother. Sharky, he's in Minnesota, 618 by 618. Beautiful. Love it. Okay. So I'm at the replay here. Let's step into the war zone. So let's start off with Spy off the bat. So generally, guys, when we gap up, right? When we gap up, it is a bullish sign, right? Especially with this large gap coming from a Nirvana pattern, we knew that there were a lot of trap bears in the pattern today. So I'm going to walk you through that. Melly, what's going on? Michael, what's going on? Trading Wars Army members, good to see you. So remember, we had this Nirvana yesterday, right? And the Nirvana is a trap, okay? So Nirvana is a trap because we have an inside-outside bar. We trap a lot of traders. So the first play of the day, right, we have this 3-minute candle. So let me ask you guys a question right off the bat. With this gap, who do you think is the most trapped right now? Okay? Who do you think is the most trapped right now with this gap up? Who do you guys think? You should remember, we had a lot. Look, we had a short seller here. We could see that, right? From this sell-off previously. We bought back, right? And at the open, this is such a large enough gap that we are trapping a lot of bears. It's not a small gap, right? If it was a small gap, then we could just, easily retrace back, roll over. But this gap was so big that we definitely had some trap bears. So anytime you have that setup coming in, guys, the first thing that I like to do is an opening range breakup. Okay. So the first thing we did right here, that's a massive gap. I doubt we will fill it today. If we do retrace, I'll probably be about halfway or less. So 1 minute left on the 3-minute orb. Be ready, long. So we right off the bat, guys, we just took this 3-minute opening range breakout. So let me walk you through this. So boom, we get filled. Okay, a little bit scary right off the bat because we get filled and we retrace. But one thing that I want to show you guys here is when we retraced here, if I take the range, okay, you could see we retraced on the 618 and we held this one. Okay, so boom, we made a new high there and then we pushed there. So pretty much here, guys, that is where the majority of the orb was let go, right? Because what you want to do with the orb, if you just focus on the first 3-minute bar, the general approach I like doing here is coming in, taking some off at the 272 and just layering it out on these different Fibonacci extensions. And you'll see we went all the way to the 1 extension here. So 1 extension is exactly 1 full candle range. So you want to be scaling out on the way up. And you can see here, great spot for some partials, lock in some more. Then the 5-minute orb came in and then we were going through the 618 here, guys. And then I'm going to show you something, which was the second trade. So the second trade after that, guys, was this. So watch closely now. So now we have enough candles to have your morning leg. Your morning leg, guys, you need at least 3 to 4 bars and you need a low and a high, right? So we have a low and a high clearly established, okay? So we took a trade in the small account. Let me pull it up for you guys right here. So right here, we made $194 at 9.53, sold at 10.08 on the small account, okay? And all we did here, guys, is literally we did the exact same thing I've been teaching you guys all week, the 618. So we bought right here on the 618, guys, and then we started pushing. Like there was a little bit of heat on there, and then boom, there we go. We got the push up. So we literally just bought on the 618. We didn't wait for any confirmation. We didn't wait for anything. We just took that 618. Okay, when we got that 618, bam, just a beautiful, clean play. And this is why I love teaching you guys the fibs, because the fibs predictive in nature. It's predictive, meaning you are already anticipating where we can bounce before we get there. So that helps you to set up orders immediately, and that helps you to go ahead and get good fills. Okay. And just to fast forward on the day, guys. So those are the only 2 plays that I took personally. We took the opening range breakout on the 3-minute chart, and then we also took the Fibonacci. And as you can see, guys, we did have some really nice advanced patterns on the 3-minute. We had some nirvanas that paid well. But if I go back here to the 5-minute, what we'll see here is a failure of a nirvana there. But what I want to show you guys is just these clean Fibonacci plays. Okay, so watch this now. So the first thing we had here, guys, was the morning leg, which I just talked about. So this morning, so low to high, we push back, we trade. So if you notice this, if I extend this out, guys, notice how when we come to these extensions, we pull back. Come to extension, we pull back. And then the afternoon leg, guys, is right around here, 12:30, 1 o'clock. Then you take the full range from the low to the high like this, and you bring it across. And then you can see for the full afternoon leg, right, we come back to the 786, right? And then we go ahead and trade to the 272 extension. And as soon as we get to the 272 extension, guys, we roll over. Bam. So just a very wonderful Fibonacci based day. Lots of Fibonacci style of trading. It was very, very good in terms of fibs. Just having the patience as well to stick with this 3-minute orb to the end of the day, guys, definitely would have paid you really, really well. All right. So that's SPY. And that's how you enter on a gap up. You can be aggressive. You can take the orb, or you can go ahead and let that morning leg establish. This is what I talk about in my Fibonacci book. Let that morning leg set up, take the first pullback, and go with the flow there. Okay. So go ahead and hit me with a 7. If you followed me there, did that make sense, my friends? This is what we call a gap and go. And if you notice, right, the gap, the range on the day of the gap is usually not really that big, because if you have a huge gap like this from the night before, generally what's going to happen is the range on the intraday will not be that big, because a lot of the move already happened overnight. And that's something you always have to consider. Okay, so then the next play we took was Microsoft. And here's my exact trade on Microsoft. I'm going to teach you guys something which is called a gap fill Fibonacci. Okay, so this was the SPY commentary in the morning. And then if I go here to the midday options power play, Microsoft, we got in at 10:16. So we got filled right here at 10:19. Okay, so Microsoft, let me explain to you. So this is the exact trade. I'm going to draw the fib up for you. So what I like doing here, guys, is anytime, if you notice the difference between SPY and Microsoft, SPY did not retrace into the gap. It didn't come into the gap. Instead, what SPY did is it just double bottomed and it kept going higher. So anytime we have a gap fill, right, this is what you call the gap fill. What I do is I like to take the Fibonacci on the gap. So taking this from the high of the last bar, bringing it up to the high of the day, right? And then all I did here, guys, is I literally bought on the 618. That was it. So once we came down to the 618, guys, I bought. And I've been doing a lot more trades focusing just on the 618 because I love the 618. It always gives good risk to reward. So we got filled here on Microsoft. It took all day for this to get some steam. But this is what you got to do sometimes with these plays. You got to be patient, get in, put your stop loss, and walk away. So I literally walked away. I didn't micromanage it, and I got paid. So we went in here into the close. Nice push up. And I have some left on for a runner for a swing trade. Okay, so that's how you take a normal trade. If it does really well, you want to leave a portion on for a swing trade. That's exactly what I did. So those were the live alerts in the midday options room. And from there, we had the midday picks on Ford. So Ford, let me just bring this up. So Ford, unfortunately with Ford, guys, we had an entry right here at 1816 and it just never came back. So sometimes you're going to miss them because sometimes they're just so powerful they won't pull back. So Ford didn't pull back, but we still caught Microsoft, so I was happy about that. Boom. So there we go. So that was Microsoft. That's how you use the Fibonacci on the gap, right? So what it's trying to do is measure the gap, right? So here's your gap, okay? Here's your initial push, and then you come back to the 618 right here. This is the sweet zone. All right, so hit me with a 4. Hit me with a 4 if you guys follow me there on Microsoft. So pretty good trading day. Very happy. We took SPY, opening range breakout, Fibonacci. Then I took Microsoft right here. Did not get filled on Ford. That's good enough for the day. Just trying to get good, solid plays. Otherwise than that, guys, just looking at Microsoft in general. Remember, we had that inside bar yesterday that I was talking about that, you know, I was expecting us to have some type of conclusion. So this is the conclusion to the pattern. Sometimes it just gaps up without you. And this is what you do when it gaps up without you guys. You got to go ahead and draw that fib like I just showed you. Go ahead and draw that fib so you can get on the dip buy. You can get back in when it comes back down, and so you get filled. Okay, so that's beautiful. Really not sure what else to talk about because that's pretty much all the trades. We are sitting in some swings right now. Tesla, just waiting for it, but definitely still waiting on Tesla here. And let's see how it goes tomorrow. I'm still in Tesla right now, so let's see how that goes. Hopefully, it can pick up some steam going into tomorrow. But generally, let me just summarize the patterns again with the gap. So if we go back to SPY, so the first thing you can do when we have a large gap is you could just use the opening range breakup right away. So that's what we did, the 3-minute orb. And then from there, what you want to do, guys, go ahead and stack a Fibonacci. So once you have an established low and high, right, usually around 10 o'clock ish, this is the midday, the morning leg. Sorry, this is the morning leg. Then what you want to go ahead and have your fibs here. These are your dip buys, your 618, right? And then your extensions also, if you want to go ahead and trade the reversal, you can actually short on these extensions. And so you have your orb, you have your gap and go strategy, and you also have the gap fill. If you go to Microsoft here, this one is an example of a gap fill when we just pop and then we start coming back down, right? And then when we start coming back down here, you want to draw the fib like that, take that gap range, and then look to enter there. Okay. Yeah, so pretty clean. Just remember that with the gaps, that a lot of the times you're going to have a buyable. If you dip into a gap, you'll generally have a buyable opportunity. Not saying that it's going to be like a huge opportunity, but definitely something that you can at least scalp or that you can at least trade and make some good profits from. All right. So now looking at the rest of the week here, guys, what we're looking at here for SPY is this gap. So if SPY wants to stay bullish, right, you see this gap right here, this gap, it needs to hold. So this green line, 450.74, if SPY wants to remain bullish, it could do whatever it wants, go sideways, blah, 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 up, down, left, right, doesn't matter. But this 450.74 needs to hold for the bullish momentum to continue. If we fill this gap within the next few days, that will not be too much of a good sign, especially if we break down. We could pull back a little bit into the gap, find support, and then bounce, or we could just keep ripping. And we have some data coming out or whatever, but I'm never concerned with that. I always trade the price action that's in front of me, and always take a bar by bar approach. All right, so there we go, guys. This was a quick one. I don't even know what else to say. Do any Trading Wars Army members, you guys have any chart requests or any questions for me? Let's go ahead and take a few of those, and then we'll wrap it up. Okay. And just get ready for tomorrow. Going into the end of the week, we have to make sure that we don't burn out, right? So make sure you guys get your sleep tonight. Stop drinking the Hennessy on a Wednesday. You got to leave that for the weekend. Yep. So we're exactly back to where we started with the 618, right? Literally back here again. So let's see now if the bulls have enough strength to push right through. And we'll know by tomorrow. Yes, I have swing trades and day trades. So I have triggers where I take swings, like I just said with Tesla. So Tesla is one as an example that I'm holding a little bit longer. The main thing is just make sure your risk is the same, whether you day trade or swing trade. Small account challenge. Yeah, so the small account play on the day was right here in the live commentary. This was the trade. So Derry wrote it up here. So let's go to his channel actually and look at it, because he writes it up very nicely. He writes it up like a professor. So let's go ahead and read it. Okay, so this was today. So day 15, needed patience here, etc. So this is the chart, right? So filled at 950 off the 618 morning leg right here. Betting on a reversal, and as soon as I'm filled, I set my stop and my target. Ended up hitting my target at 2R. So he does the 2R approach, and the 2R approach basically is, if you're trying to make double of your losers. Okay, ended up hitting my target at 2R. Can't ask for more. 2R is the golden target for me. Every day the goal is to get better and level up my game, regardless win or lose. No emotion. Everything is a learning experience. Exactly, and that's what I'm trying to teach this young gun here. To follow that approach. And there is his P&L 194. So he's definitely out there trying to help you guys, man. So definitely follow the channel. Make sure you're tuned in, zoned in. Okay, Could you please go over Netflix? So yeah, um, Netflix, we had the inside bar yesterday, right? And right off the open, we did retrace pretty hard, right? But eventually, Netflix did do what we thought it was going to do and just break out, right, of the inside bar. It just took it had a little bit of chop in the morning. And if you draw the fibs here on Netflix, you can see that this move right here, this low to high, right, had a nice little pop down right into this zone here, 618,786. And guess what? We had a nice Nirvana supporting that as well, which ended up being a big winner. Okay. CVX ready for tomorrow. Let's take a look at that. CVX. Yep. There it is. CVX is one of my plays for tomorrow. So outside, inside, inside. So holy grail into a double inside bar. Very, very tight up against these highs right here, guys. So I am ready to rock and roll and watching this one into tomorrow. I think it's the all-time high. I think it is the all-time high push here. So this one can just blow through the roof tomorrow. So be very, very, be ready. Be ready for this one. Okay. So I'll be watching this. All right, guys. So there we go. I want to thank you guys. I've been getting a lot of book purchases and I really appreciate your support. Obviously, you guys, you guys are learning and that's the main thing. So I just want to say that again. If you guys get any one of my books, so the SPY, Fibs, or the stock book, it comes with 1 month for free in the room. So you can learn the education and you can apply it to my live trades, my live call outs, guys. I do them every single day. Whether we win or lose does not matter. With the 2-to-1 risk to reward, we only need to win 34 out of 100 trades. And that's the model. We take a bar by bar approach. All right. If not, guys, you can sign up directly for the rooms right here. We have the SPY room right here and the stock room right here. Okay. Otherwise than that, it's a short stream. I'll let you guys get back to the club and have a good time. And let's wrap it up here. So please leave me a comment. Any comment is welcome. We will be doing giveaways on Sundays. So if you do comment, you have a chance to win a giveaway. Today's question is going to be 6. So yesterday we did 618 versus 50. Which one is your favorite Fibonacci? Today we're going to do 618 versus 786. So which one is your favorite? Which one do you trade more, the 618 or the 786? And that's it, man. We wrap it up right here. Thank you very much for your time. And hope we have a great week to wrap it up. I mean, these last few days have been good to us, but you never know what the market has. So you just got to take it bar by bar. Okay. So thank you very much for your time, guys. See you tomorrow.